That giant cup and handle is predicting a move that should take us well above $150, but probably around $300, $500 silver. I mean, it sounds crazy, but $300, $500 silver is where that giant cup and handle is predicting prices that are more in line with that, maybe even higher.
What I did was line up the bull market that we're currently in with the bull market of the 1970s. And I've done this before for gold. I don't know if I've ever done it before with silver. It doesn't line up quite as cleanly as the bull markets in gold do, but you can see that, we're here, this white line, we're at about $38. This was Friday's close. And it looks like we're getting ready for a vertical move. It looks like we're so close to following what happened in the 1970s.
Hi, it's Mike and Alan once again with the Gold Silver Show. Alan, what have you got for me?
Hey, Mike, thanks. Yes, today I want to talk about silver because it has been on a tear lately. And you posted a video over the weekend on Saturday, and we had some great comments on that. And I wanted to follow up with some important movements in the price action of silver.
Excellent. Okay.
So there was one comment that we got from a viewer, Locutus of Patriarchy, and he said silver would need to hit near $200 to reach the 1980 level in terms of purchasing power. Due to the coming scarcity, I would not doubt if silver goes vertical at some point. We're going to talk about that, silver going vertical. There would no doubt be hyperinflation in the vertical move, but that's exactly why one might stack physical. The dollar continues to weaken. Congress keeps spending, and the Fed keeps printing. Hold fast, folks.
Yeah, well, there's one thing that I want to say about that is I agree with everything that he's saying. Hyperinflation, I don't know about that because it's the world's reserve currency, and there's sort of the law of big numbers. And although we have seen the Fed already hyperinflate bank reserves, that truly did get hyperinflated. We went from less than $1 billion to I can't remember what the peak was, but so I don't know about. I believe a vertical move is coming, and Congress does keep spending, and the Fed will keep typing. They don't actually print that much. They type currency into existence, and the difference between 1 and 1 trillion is just 12 zeros. So,
I love that.
However, I think Locutus should go watch part of this video again because he says silver would need to hit near $200. Well, $200 was the CPI. There's a whole section on the inflation. And the problem with the CPI is it cherry picks a few different items in society. It's not measuring everything. And true inflation is the whole economy. What does everything cost in society if you could add it all up? The thing is, the stock market's inflated the most. If you look at the Wilshire 5,000 index that I showed there, I showed the inflation of everything. And basically, if silver had kept up with real estate, it would have been $468 or GDP, $468 if it went into the same type of bubble and had the same purchasing power of real estate. If silver had the same purchasing power against real estate, would have been 468, and that's the level that it had in 1980 in today's dollars. And so this near $200 level is half that. And if you're talking about the Wilshire 5,000 index, the $200 level is less than 90%. It's more than 90% less than the purchasing power that it had in 1980. Let me see. I think I was looking at that. Okay. So to have the same purchasing power as 1980, the Consumer Price Index said $200 back in the summer of 22 when the book was published. But 468 for a single family median price home, 2,178 for the Wilshire 5,000 stock market index, 1,059 to purchase treasury bonds with the same percentage return. US GDP 468, currency in circulation, it should be going, it should be $971 an ounce, M2, MZM. So I measured it against all these things. But in order to buy a house, its purchasing power would have to be 200 to have the same purchasing power as 1980. It would have to be $468. So that's measured against the house. Saying near 200, well, I guess 468 is sort of near 200 if you're saying that it could go to 1,000. Or it could go vertical, looking down from a really high point like that. Yeah. Near $200, 468 is, but I think that we're headed for over $200 because it isn't going to be near, like coming up from where we're at, sort of approaching $200. That is, we've already done those calculations, and that's looking in the rear view mirror. So yeah, so what else did you have to say about, I think everything in his comment is absolutely spot on, except go back and watch that piece where I go through one of the pages in the book, The Great Gold and Silver Rush of the 21st Century.
Yeah, exactly. I agree with you, Mike, for sure. And
Okay.
I also agree with you that we wouldn't necessarily have to see hyperinflation in order to get that vertical move in silver. So yeah, but I want to spend the rest of the time in the video talking about that vertical move. Again, looking at another possible price prediction and just sort of zooming out and looking and seeing what's possible. Beautiful. So the Happy Hawaiian tells us that silver has the highest 6-month close in history. And what he's looking at here is 6-month candles. And you can see that at the end of June, a couple weeks ago, we got a candle that has a higher body than any candle in history. The wicks sometimes have gone higher, but the highest body in history, we're now at an all-time high ever. So that's very exciting. That shows a new breakout is possible.
Right.
Yeah, and we can look at the same type of thing on stock charts here. This is quarterly, so instead of a 6-month candle, we have basically 3-month data points, and you can see that on a quarterly basis, we are also at an all-time high.
Yeah, I want to point out here for people that you are using what I use when I make most charts because it's less confusing looking. So this is solid line thick, it's called, is the selection that you make on stock charts. And what that does is it eliminates the wicks that are at the tops and the bottoms of all of those candles. And it just goes off of the close. So this is and you can see that on a 6-month or the quarterly, yeah, he did the 6-month. I don't know how he did it, but on a quarterly, this is the highest close in history on a quarterly. Exactly. Yeah. And so super, super bullish moves. Now, another thing that I want to point out is since 2011 or since 2012, there's a cup and handle that we have broken on the quarterly. The cup and handle there has been broken, but that makes the handle of a giant cup and handle that I was the first one to point out a couple of years ago in one of the videos. And that giant cup and handle is predicting a move that should take us well above $150, but probably around $300, $500. I mean, it sounds crazy, but $300, $500 silver is where that giant cup and handle is predicting prices that are more in line with that, maybe even higher. So that is really exciting when you put this in that perspective that I had not looked at how the cup and handle for the giant cup and handle formation is playing out. But this is sort of a confirmation. We've already completed on a quarterly basis. We've completed the cup and handle. It's done.
Exactly.
We don't have to go up any higher.
Yeah,
but the pattern is in there. It's going. So, okay, what's next?
Yeah, exactly. I just have the same data annual real quick, just to show that we're on an annual basis, we're still at an all-time high. So,
and we have confirmation of the confirmation. The cup and handle is complete. We've broken through resistance on an annual and a quarterly basis.
Yes. Super bullish for silver. Super bullish.
Super bullish for mid triple digit silver. I mean, 100 or $150, according to if you're a technical analyst, those prices would be too low. They would be off the table. You wouldn't be considering a bet if you're just a technical analyst placing bets and betting on how often one pattern is correct versus wrong. It would be great to have a weekly and then a daily confirmation, which I believe we're going to be getting soon, and then an intraday. But this would be early on. The odds are a little bit lower when you're placing that bet. When you got these other confirmations, it gets more and more technically probable. However, the more confirmations you get, the more that everybody else is jumping aboard and you're going to be late. I hadn't thought about looking at, because I've been showing that giant cup and handle in my presentations now for a while, but I've never looked at it as, oh my God, we've had the first confirmation. Oh my God, we've had the second confirmation. It's happening right now. This is confirmation. We are at all-time highs. The cup and handle is complete on an annual, a 6-month, and a quarterly basis.
Yes, it is very exciting. And I know a lot of silver stackers have been holding for a lot of years. They've been so patient. It's been so painful. And it looks like we're finally going to see that payoff.
I started this in 2003 and down at, this is an annual, but down at about $4.30 or $4.50, something like that. Okay. I discovered gold in October of 2002 and started buying gold then. I think it was April of 2003 that I started buying silver, because I learned that it was so undervalued. So way before I got into this business, I started buying, got all excited about it, started learning about monetary history and economics and such. Okay, let's move on.
Awesome. All right, we've got a tweet here from Tavi Costa, friend of the channel, and he's showing silver prices on a 10-year rolling basis. So basically the percent change after 10 years ongoingly, a rolling window. And he points out the first bull cycle back in the 1970s and the second bull cycle, which sort of peaked in 2011, he's saying. And he's making the argument that we're starting a third bull cycle right now. So here's what he has to say. And this, by the way, was from the end of June. So this is before we got that quarterly close that we just talked about.
Wow. Okay.
He said silver is approaching a record quarterly close, which could mark the beginning of a price discovery phase, in my view. The near-term setup looks particularly compelling right now. It turns out he was right, right? Other metals are starting to catch up to gold, despite many claiming that would never happen. In my experience, investing in natural resources, these markets are deeply interconnected. One bull market often sets the stage for the next. This is likely one of the most broadly constructive macro environments for hard assets that I've seen. So, yeah.
Okay, well, I've got one thing to say when he says that they're deeply interconnected. The difference with the precious metals is that they are also monetary. And when people have a lot of fear, everything else crashes and all of the other commodities go into the dustbin, while gold and silver just take off to the moon.
Yeah, exactly.
So
I'm a big fan of gold and silver, and I spend less time focused on all those other commodities. That's me personally, and I know plenty of other people are that way too. So
yeah, I like to look at what copper is doing. I don't really care about platinum and palladium. They have never been money. They aren't money now, and they will never be money. And so when there's a crisis, people are not going to be rushing toward palladium. They're going to be dumping that for gold and silver. Gold and silver will go to the moon. And when the economy is bad, people don't need the base metals. They aren't building as many houses. So timber and cement and iron, all of these things do not do as well during bad economic times. But even during the Great Depression, gold did really well.
Yeah. Exactly. So what I want to do here with the remainder is take a look at some charts about what could happen in the coming bull market, and is it going to look like the previous two if we separate the 2011 peak as a separate bull market.
Okay.
So here we have a chart of the annual return of silver. Okay, so every year starting in 2000 going to 2010, and you can see, it has its ups and downs, but 2010, the final year of that bull market, was the best year, returning about 80% in a year. And what I did was add in the fraction of the following year, 2011, where it was still rising in price. So it was ended up being about a
Okay. So in
year.
2011, I think it peaked in April.
Yes, I think you're right. So
Yeah.
about another 4 months. So this big bar here is really a year and 4 months.
Yeah.
So it did 180.
It was mid-April, 3.5 months. Yeah. A year and 3.5 months. Okay.
Yeah. So you can see, even without that, the final year was the biggest year of the bull market. So we talk about this on the channel, that like the biggest move happens at the end. And it certainly seems like we're getting ready for that again with silver.
Absolutely. Okay. Next.
Yeah. And this is where we are now. If you kind of start the bull market back in 2016, going about 10 or 11 years, so far in 2025, silver's doing really well, up about 30%, but we're only halfway through the year. So if it continues on that pace, it will return 72% this year in 2025, if it continues, which would be its best year so far. And it could get that 187% or something very, very large in 2026. Who knows? But it seems like something big.
Well, yeah, but this is so far, and people are just waking up. Silver, precious metals just haven't been on the average person's radar for some reason, even though they're the best performing asset class other than cryptos of this century. It should be something that everybody has been holding for 20 years, like I have, more than 20 years, 23 years for gold, 22 years for silver. It's paid up for me. It's done really well. I just accumulate and accumulate and accumulate, and I don't sell off. I did sell a couple of odds and ends that I had, but I replaced them with just ounces of bullion because I had storage accounts and I was paying minimums on these little trinkets, basically, where I only had a few of this and a few of that at Brinks, and I didn't want to be paying those excess storage fees. So I sold them, but I replaced the ounces with what I already had, bars and silver eagles. So, okay.
Awesome. So we could get a big move here. It could be something, like 200%, or it could be like the 1970s. And what happened?
We could have that this year, is what I'm saying. We are only halfway through the year here.
It's true. We could. Of course we could. And what happened at the end of the bull market in the 1970s? Well, it was over 400% in a year. Okay. And if you continue on the way I measured it just a moment ago, the peak that happened in January of 1980. So if you take a year and 3 weeks, the return was over 720%.
Yeah. So, and that's for the high that from the data that's available from where? Stock charts?
Stock charts. Yeah. So that was a peak of 49.50.
Oh, okay. So what would it be if it was the Chicago Mercantile Exchange at 52.50 roughly? Have you got
That's an extra $3, and the price at the beginning of the year was $6.02. So it'd be an extra 50%. So 772% plus minus.
Wow, 772%. Now, one of the things that I want to point out for people is this is all of 79 and 3 weeks. However, in 79, that 425% move or whatever it is there, most of that happened in the last month of it. So from like 100 to 400, or maybe it was 200 to 400, most of that gray bar happened in December, maybe November, December. But really, silver waited until like the very end and then just suddenly exploded. And so really, of this 772%, Yeah, 772 for the intraday high. Probably 500% of that, possibly even more, came in just like 60, somewhere between 40 and 60 days, maybe 90 days at the most. But it was just, I'd have to look at a chart and see the data in front of me. But it's, everybody here should look at it. Go on stock charts and look at stuff back in the 70s. So anyway.
It's incredible. Okay. And that's why I'm bringing it to everyone's attention, because it's hard to believe. If someone said, oh, silver could double this year, like, you know, if you have no awareness that it's happened before, you just dismiss it as impossible. But I mean, look at what's happened. It went up by a factor of 8 in a year. So we're going to get that vertical move. Speaking of which, I just wanted to remind us of the comment we started with. I would not doubt if silver goes vertical at some point. So I just want to get that in our heads. Like, silver could go vertical. It could just go up so fast. It's like you blink and you miss it. So it could happen in, 30 days or 60 days, as you're mentioning here, Mike. And so what I did was line up the bull market that we're currently in with the bull market of the 1970s. And I've done this before for gold. And I don't know if I've ever done it before with silver. I tried to find an old chart and I couldn't find one. So I just made this one from scratch. It doesn't line up quite as cleanly as the bull markets in gold do. But you can see that, we're here, this white line, we're at about $38. This was Friday's close. And it looks like we're getting ready for a vertical move. It looks like we're so close to following what happened in the 1970s. Okay. So anything you want to say about this, Mike? Otherwise, I have a price prediction, because a lot of people are wondering, how high is it going to go?
Okay, go ahead and give me your price prediction, and then I'll make a comment.
Okay, I just said, if it goes up here to the same height as the blue line at some point, maybe in the next year or two, what would this price be with the new axis? And the answer is about $660 per ounce, something like that.
Makes sense to me with everything else that we have just covered. With all, if it goes into the same type of bubble as in 1980, this would be the range that I would actually expect. The same type of bubble measured against other assets, not measured in price, measured against what purchasing power does it have for a single family median price home? What purchasing power does it have for the Wilshire 5000 index, the Dow Jones Industrial Average, a pound of copper, a ton of iron, a bushel of wheat, real things. Now, the other comment I wanted to make is this is a logarithmic graph. And so that tends to compress the top and stretch the bottom of any graph. If you want to see a vertical move, you should take a look at this on if this was measured in dollar change, amount change, instead of percent change. This is percent change. 4 to 24 is the same percent, 1 to 4 is a factor of 4 times. 4 to 16 is a factor of 4 times 4. 16 to 64 is 4 times 16. And so that compresses the top quite a bit. So if you want to talk about a vertical move, taking a look at this in a linear format would give you the impression of a hyperinflation.
Yes, exactly. So maybe we could do that in a future video.
Okay.
So I want to end here with our meme of the day. It comes from Elon Musk. Where are we with dollar value destruction, you might ask? Well, you are here.
Silver dollar, silver certificate, a Federal Reserve note. Zimbabwe, is that 100 trillion?
50 trillion.
50 trillion. I've got $100 trillion bills here. I used to, I bought a stack of $100 trillion bills. I can't remember the number of quintillion that I bought, but we used to send them out as a bookmark. With every book, you got a $100 trillion bill, and then bullets, buy ammo after that. So this about sums it up.
Yeah.
So I want to thank you for the presentation, and I want to thank everybody for watching. Bye, Alan.
Bye, Mike.